Welcome to Fitness and Finance Radio. I'm your co-host, Tony Shore, and I'm here with our hosts, Jeff Smith and Jennifer Scherer. I paused there because I'm just excited, and I was going to launch into the California weather report, and then I thought, no, I'm just going to introduce the hosts. We'll get right into it today. But I will tell you, I would like to give the California weather report because it's going to be a hot one today, 85 in town, 95 in the valley. I suggest y'all pile the old jalopy and head on out to that beach where it's going to be a cool 75 degrees in the air, 70 degrees in the water, and we've got a swell from the west today at 3 to 5 feet. So grab your skids and let's go surfing.
Love it.
Well, ironically, we're leaving for the West Coast tomorrow.
We are.
So, yeah.
Where are you going?
I'm so glad we got the report because we're going to sunny Southern California.
San Diego.
We'll not finish the way that
I'm Ron Burgundy.
Ron Burgundy.
Who put a question mark after his name? He always reads only what's on the teleprompter.
Gotta be
no, San Diego is beautiful, and I will tell you, if you've never been, have you guys been out there before?
Yeah, we got engaged out there.
Yes.
Oh wow. Okay, so you're I can't tell you anything you don't know.
La Jolla was
beautiful.
It was nice.
Mm-hmm. Oh, La Jolla is nice.
It was perfect weather.
Yep.
Yeah. It's going to be great. You just a vacation, or is there
business? A day break? Yeah. Actually, I'm meeting with a potential client out there. So too.
Yeah.
Sure.
So kind of both.
Yeah.
The San Diego chicken.
The Colonel with his wee beady eyes. You're gonna bite my chicken.
I always hated the Colonel. Dad, how could you hate Colonel Sanders? Because he puts a secret chemical in his chicken that makes you crave it fortnightly. Smart Alec.
Fortnightly.
Yes. Head pants no.
Head pants no. All right, we're gonna have to play before we get going here. Before we get going here, listeners, we have a special video that we're going to debut on the show today.
Really?
And I think this is a good one. I think this is a great one. Check this video out. Really hang on here. Let me
preventative maintenance. We talked about saving your tires.
Hang on. Too many playing at once here. I want to play.
How do I feel like this is a setup for me?
I know.
Here we go. No, it's not. Here we go. One way people can really figure this out and help they can give is the retreat that you're now going to start doing.
The first day, we cook all the food for them.
Mm-hmm.
The second day, we cook with them. The third day, they cook for themselves.
Oh, wow. Okay.
So the whole idea is that we we train them to do the things that we.
So when I come and do this, the third day we'll have pizza. Is that what you're saying?
Nice. That does make sense.
And Tony, there's a way to make pizza deliciously healthy.
Mm-hmm.
Oh yeah, you can use. I've had cauliflower crust, which is really good out of cauliflower.
Yeah.
Mm-hmm.
I mean, Jeff does all kinds of stuff with. I mean, even just sourdough toast with like fresh mozzarella and fresh tomatoes and a little bit of pesto. Oh, it's so good. It's simple. He'll bake it.
Yeah. So it's more like a caprese, like kind of salad on top of a sourdough bread.
It's good.
But
it's still delicious.
It definitely hits that pizza craving
for sure.
Square in the face.
Oh yeah.
So we're talking about taxes though today, and
what is
your title making? I'm just going right into it. Tax time.
Yeah.
People cringe when they hear taxes. We dread it. But how can we make tax time terrific? I mean, what are you talking about there?
I'm actually excited this year. Maybe not necessarily for our particular situation, but for a lot of my clients. Who are married over 65. I mean, they're looking at a much better situation than they have in the past. The standard deduction is higher. There are, additional benefits that are built into that. We've got so many good things going on. Tax rates are lower. We're getting tariff revenue. So it is taking a burden off of the taxpayer, which, has this wonderful effect for people that are kind of middle class. I think we're going to see some real change to the way we're taxed in the next couple of years. I really, truly do. I think it, I'm a glass half full kind of guy. So, this is obviously not any bias, but I'm totally bought into the tariff situation. And whether you agree with it or not, I have not been impacted by the tariffs, certainly not any more than we were impacted by inflation, just a couple of years ago. So I'm all for it. And if it makes it fairer for us with regards to the rest of the world, I think it's even better. But as it relates to us, the end user, right, that's really what matters. And I'm seeing a big positive situation ahead. So I'm very excited for that.
That's awesome.
Yeah, I think that's huge. And I think taxes are a concern, but there have been a lot of positive changes, is what you're saying, Jeff. I know the additional tax credits for those 65 and older, or that is added to, or deduction, I should say, not credits, but deduction added on to the standard deduction, 6,000 per person additional.
Right.
And they've even made it without itemizing. To use that standard deduction, you can even take off some for charitable donations.
Right.
I think it's like $2,000 without itemizing, still get the standard deduction and be able to write off some charitable giving, right?
Yeah. And so what's so amazing about this is that it simplifies that for so many seniors who are worried about having to itemize or fill out a bunch of forms that are confusing, and they're not sure if they can do this, they can't do that, whatever it is. It's really, it's difficult, and taxes in general, it's like, if this, then that. There's like 1,000 of those things, choose your own adventure kind of thing. And so it can be very confusing. So if you can just do the standard deduction, the simple form, I mean, that's such a huge win for so many people. Simple is always better as far as I'm concerned.
I just feel like, go ahead. Well, I just feel like we have a bookkeeper, Tammy, who is on top of it. She is like emailing us in January requesting documents and paperwork and W-2s and 1099s and receipts and all of it. And it's amazing when you have a partner during tax time that's, proactive. You're not scrambling, come tax time to get everything together. So that's been huge for me. Is in the past, I did not have that person that was that proactive. Yeah.
It's such a challenge when you don't have that. When you just have the rear view mirror kind of, taking the same stuff that you can do, it's really disheartening. But at the end of the day, it does matter who you surround yourself with, right? So getting that right tax person is a big deal, professional in general. But for a lot of seniors, this year is going to be, pretty much manageable for themselves, or someone who can do some basic tax filing. So not terrible. And the future, I see this even being better situation. One of the things that I dislike about our system is that we're taxed so many different ways. So we're taxed on our income, then we're taxed at at the stores. Anything that we purchase is taxed. And for Jennifer and I, we have payroll taxes on top of other taxes and taxes here and there. It's just everywhere. And I feel like there's a couple of things that kind of help us. Jennifer and I bought into HSAs, which are tax deductible, or they go in pre-tax. I'm not a huge 401k guy. I don't, I think that if you're borrowing, you're basically borrowing the government's money, and then they're going to ask for it at a later date, and you don't know what that tax rate's going to be. So it can be a little bit confusing, but there are great ways, especially if you're a business owner, to take advantage of some deductions. I'll pause there because there's a lot of things there to unpack.
Yeah. Well, we at the studio accept HSA funds for, medical exercise and dietitian services. And that's huge. If you submit that documentation and let those services be HSA eligible, it's like a double win.
Yeah, tax free.
You reduce your taxable income and you improve your health.
That's
so
huge.
I always encourage that if that's an option for you.
Well, I mean, even like Peloton, those things are, HSA approved. I mean, so if they are, then obviously, fitness studios are going to be HSA approved. It's an incredible gift. That people don't know about or take advantage of.
Yeah. And two, if you come into the fitness studio thinking that you're going to be able to use HSA funds, to me, it's like, come on, that's a no-brainer. You have and a lot of people think, well, that's just for eye doctor visits or medications or, those type of expenses. But I always like to encourage my clients to think in terms of prevention.
Yeah, preventative health is covered, is HSA approved. Yeah. And that's really important, isn't it?
Yes.
Yeah, I mean, and the thing is, right, once you break through that barrier to, like, I had rotator cuff surgery literally a year ago. And thankfully I had the HSA. I went through that deductible. But then after that, everything was, free too. Not free, but
covered.
Covered. Yeah, I should say covered. Certainly not free.
We don't like the word free here.
Yeah, that typically means somebody else is paying for it. So
right.
But anyhow, so many people sleep on HSAs because the deductible is so high. But honestly, if you go through a year of saving that money and you get ahead, then anything going forward is additional. So just an awesome opportunity for so many people. And Tony, honestly, I didn't see this going in this direction, but HSAs are also a huge leverage for people who want to retire early. So I do have younger clients who come in and say, I want to retire at 50. I want to retire at 55. How can I do that? Well, you first have to fill in, your income during those years to get to 65 or beyond. But the other thing is, how are you going to account for health insurance? And HSAs will allow you to do that. You can use that money for premiums and deductibles. So saving in your 20s and 30s and 40s will allow a massive opportunity for people to retire before the age of 65.
Well, HSAs are the only IRS tax designation for an account that allows you to you get a tax break on the money going in. It doesn't count toward taxable income. It grows inside the HSA. It grows with compounding interest tax-free.
Correct.
And 100% of it comes out tax-free. It's the only triple tax advantaged account in the IRS tax code. Not everybody has access to it or is eligible for it, but more and more people all the time. And I know there are proposals to make it more accessible for more people. And I think that's going to happen. HSAs are great, especially if you can have the discipline to keep putting money in while you're working and use it for after you retire, or use it for preventative healthcare issues. And Jennifer, that was a great point. So HSAs are a big one, and I think that's huge.
Well, just like in the gym, I mean, what you're doing with tax time, prepping for deductions and all that is a lot of work to do it, but it pays off in the long run. And it's just the same way in the fitness world. I mean, the work you're putting in now is definitely helping your future. So think about the long game for sure. I think the other thing that maybe next time we do the next episode is talking about putting your tax refund to work for you.
Yeah. A lot of people, stress out during this time of year because of taxes coming up, that looming deadline. Oh man, am I going to owe money? And then so now there's stress. And I know, Jennifer, you work with people on reducing that stress, and that can affect your health and your physical well-being. So that's where the fitness comes in and the preventative care. But then afterwards, people are like, I'm going to get a big return. And Jeff, I know you don't like that because that means you've been borrowing money to the government and letting the government earn interest on your money rather than you earning interest on your money.
And that's a big issue. There's a huge, flip-flop there, because if you're late or you underpay, you're going to pay around 7% interest, 8% interest. That can be lower than that, but, and a penalty, right? So for the use of their money, you have to pay. But for the use of your money, they do not, and they don't. So there's no point. I'd like to, be within, $200 on either side is fine.
Yes.
But the other part that I do find a lot of people do is they use that tax return as a vacation fund.
Yes.
Right. I have noticed that a lot of people love to use that to go on a trip or buy something that they've been saving for, and they use the government to do that. And I can tell you, I understand conceptually, because people are afraid that they'll spend the money if they see it there, right?
Right.
So for just a little extra self-discipline, you can get a significant higher return potential by doing it yourself. And
especially if you have it automatically set up to transfer into a special account that is a vacation account, right?
Yeah,
and then you can earn interest on it, at least something, right?
Yeah.
Rather than let the government earn interest on it. And I'll be honest, my wife and I used to do that. We used to love getting a big tax return, and we'd use it to go on a vacation.
Yeah.
That's exactly what we did.
Mhm.
And of course, that's before I started working with you, Jeff,
Yeah.
and understanding finance and going, why are we doing this? Why don't we not pay anything? Why don't we get within the 200 or 300 on either side and then save money during the year for a vacation?
Exactly. And old school banks used to do the Christmas club, right? So you'd put money in and you couldn't touch it until November or whatever. I mean, you can set stuff up. You can put your own rules on things.
Sure.
And we'd be, happy to help set up something that isn't going to the government. I mean, let's
Right. You can use, and there are tools, depending on what your time frame is. There's MIGAs. There are a lot of tools nowadays available to people.
Yeah. If you're eligible, there's tons of things that are safe, have a good rate of return, and it's going to be there when you need it.
Yeah.
And so there are great options out there, and I definitely encourage people to take hold and control of your own money and stop giving it to the federal government. I mean, we're already giving them way too much in general, and I have a healthy disdain for taxes in general, but I mean, it's something we have to deal with, right? But there are, we have an obligation to pay what we have to pay. We're under no obligation to pay any more than that.
Right. Well, Jennifer, what would you recommend people do with if people are getting this nice tax refund or a chunk of change in a tax refund, which this year many people might be because of the standard deduction has increased, things like that. Tax bracket stayed low. So let's say we are getting this big tax return. What's a good use of that money?
I mean, for sure, I would encourage the listeners to think of it as a personal wellness bonus. Right? So if you're getting a tax refund, use it, invest in your health. Even if you go through, we're now doing the option to do like a 5-step comprehensive evaluation just to kind of get an idea of your baseline and what specifically you need to work on. And so you can leave after those 5 appointments with a complete roadmap and take it and do it on your own. You don't even need to work with us necessarily, but invest in a plan and understand your baseline. So you're not just shooting in the dark, like know where your strengths and weaknesses are. And that way you have an expert that's able to put together a program. to address those.
So good.
Mm-hmm.
And that's the thing, right? I mean, the same thing with our firm. We have clients that come just to get a plan, and they enjoy doing the trading. They enjoy doing the things that most people don't want to do, but they want the roadmap, and they also want to be able to come back and say, "Hey, am I on course?" That kind of thing. So, I mean, that is an inexpensive way overall to get professional advice and some guidance, but do it yourself. If you are a do-it-yourselfer, I know how tough that can be to try to budget for it, but there are ways of getting access to both of us professionally, without having to have a massive obligation that you may think. So
Well, sure. And Jennifer, I like your idea of putting your tax return toward physical well-being, preventative care, health and wellness, because I was thinking big tax return, hit the pizza buffet. And so I think a more important thing to do with that tax return, stay away from the pizza buffets and put it into physical fitness. I need to get on that better diet. And I know you guys work with people on their diet too, and cooking healthy foods. And I think that's so important. And I'm really working toward that goal myself. And I think that you guys have been very helpful and inspirational in that. To really make that a priority this year. And, we're tying it into taxes, but, make tax time terrific, right? Tax time can be terrific. It can be a positive thing. If you're working with professionals like yourselves.
Yeah, it doesn't have to be scary. I think one more point that I would like to make for, this environment that we're in. It is a really good time to take a look at Roth options. You can recharacterize your traditional IRA or your part of, your traditional IRA into a Roth IRA where you pay the taxes. You don't pay the penalty if you're under 59 and a half, but you can recharacterize it. And I'll tell you that this is a really good time. Taxes are historically low, and income taxes are. So, I like to look at either side of the new year and to do that. We have an awesome report where we analyze your tax returns and identify what is appropriate to do as a Roth conversion. And I'll tell you what, I love that. More people need to be tax diverse. So many people are so heavy in 401ks and traditional IRAs. And we really, really need to have some diversification.
Yeah. I would agree with that. And when you talk about Roth conversions, you're not just talking traditional IRAs, traditional 401ks, 403bs, any type of tax deferred retirement account where you're going to pay full taxes on that money when you take it out later in life or in retirement. Get it into a tax-free account and pay taxes on it now is what you're saying, to save money. So it grows tax-free.
Even some, traditional life insurance policies have the ability to grow tax deferred and come out tax-free if it's done, structured properly for that specifically. There are opportunities. So if you can't contribute to a Roth at work, or you make too much money to contribute to it, there are other options too, to diversify your tax situation. We happen to know a bunch of them, and the best ones, or at least we think they are anyway. And but they are good opportunities. Everybody should be paying attention to that. It doesn't matter what your income situation is. It's not for the elite. It's for everybody, and you can do that, and you should do that.
Yeah, Jeff, you're awesome.
I'm awesome.
Yeah,
look at that.
Well, I was just thinking it's just flash back to when I first started working with him, and I was definitely, being a business owner, I was like, how can I maximize my retirement with a Roth IRA? And he was able to come up with a creative solution that I hadn't, been introduced to by my previous advisor. It was amazing. I was like, wow, okay, this is how to do it. So I think having a second opinion too, to make sure that you're getting all angles and you're not just putting all your eggs in one basket is huge. Yeah.
Well, thank you for that. That's awesome.
Yeah.
I think there's a lot of really good advisors out there. But there's a lot of people that have one thing that they're really, really good at. We have a lot of good folks around us that help us in these specific areas. And we try to be extremely comprehensive when it comes to planning and leaving no stone unturned. We do a lot for business owners. And like Jennifer said, I mean, it's stuff that, most people never even heard of. So, anyway, and it's because we have some experience, right? So we've been doing this for 25 years. There's not much we haven't seen.
Right. Well, hey, before we go today, why don't you let our listeners out there know you've talked about getting a second opinion on your health, on your physical health and your financial health, your tax situation. And I know you work alongside tax professionals and you have a great team there. How can our listeners get a hold of you and set up those consultations?
So visit our website, and it's fitnessfinancepro.com. And then from there, you'll see the option to book a discovery call with Jeff and myself.
Yep. You need a plan. In fact,
what is your tax plan?
That's a good question to ask yourself right there. Well, Jeff and Jennifer, another great show. Appreciate you guys. Again, all you have to do, listeners and viewers, is go to fitnessfinancepro.com. Fitnessfinancepro.com. Check it out. Schedule an appointment right from that website. Jeff Smith, great talk on taxes. Jennifer, look at you weaving it right into the physical and wellness aspect. I love it. You guys are great. Listeners and viewers, thanks for tuning in. That does it for today's episode of Fitness and Finance Radio with our hosts, Jeff Smith and Jennifer Scherer.